Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, as well as futures, options, and investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I have been experimenting with high yield strategies for about the past year and a half. I brought over a chunk of my net worth, about a quarter of it, into a strategy portfolio I call Cash Flow Life here, that seeks to, number one, pay my bills, and number two, pay down and maintain my margin debt over time. Please hit like and subscribe if you like what we're doing here. Please know that nothing here is ever investment advice, not now, not ever. So please do your own due diligence before making any investment decisions. What I wanted to do today, I wanted to talk about why the all-weather approach, right? And again, nothing's a one size fits all when it comes to investing. So the reason I made Cash Flow Life an all weather strategy was that I really need a hedge. I really want to mitigate risk as much as I can. I've been watching. There's a lot of good YouTube content out there. I've got the people that I watch on a pretty consistent basis, people I stumble across, and what I've found is that there's a lot of all or nothing in a lot of these videos. What I mean by that is, and it's not a knock, it's not a put down, but what I found is you've got your doomsday preppers, some of them I like, where, food and water, physical gold, physical cash, that's it, hunker down. That's great. I mean, yeah, everybody should have a game plan for that. I agree to an extent, right? But I don't believe everything. You've also got your high yield strategies that are all equity, right? Put everything in ulti, put everything, in ultra high yield and, watch it go. You've got your sit in cash, right? Sit in short-term treasuries. The current Warren Buffett approach, right? Sit in treasuries, wait for the collapse. Fine. I think a collapse is coming too, but I also know the risk of sitting in cash for too long. Of inflation can start eating away things. So I guess without sounding like I'm on a high horse, I think that having diversification, not being so all or nothing, in my opinion, is a much better approach. Having exposure to equities in different ways, right? Whether it be high yield, growth, or both, right? Having some inverse funds to hedge risk, right? Having short-term treasury bills, having long-term treasury bonds, having precious metals in physical form, in, ETF form, maybe geographically diversified in vaults over the world, having, gold and precious metal ETFs and closed-end funds that cash flow you, right? Or all the above. So I think just out of, my experimenting and what has worked and what hasn't for me over the past year and a half, that's how I, really came up with these holdings, right? These 15 core holdings. And I'm not including KYLD and YQQQ. I don't count that. I don't dollar cost average back into these, okay? But at the end of the day, I do stick to the old adage that pigs get fed and hogs get slaughtered. I think there's so much truth to that. Again, I want to mitigate risk to the downside before I worry about what I could potentially make. And again, as long as my income is higher than my bills and also covering the majority, if not all of my margin, from those distributions here, I'm happy, right? I don't care if Cash Flow Life is going, slightly up, slightly down, sideways, whatever. That's the goal for this. Okay. So I think when you invest, especially in a high yield strategy, keep in mind, don't try to check your biases, before investing. Try to, stop and realize that maybe the way you think works or is right isn't always the right way, right? I love, my favorite are the people who have been invested in Tesla and Tesla leverage products for up like hundreds or thousands of percent. And they're just over the moon, right? They're always the best way. Well, for a short time, but everything reverts back to the mean, right? So again, I want success for everybody. I know some of us, there's a piece of maybe, just looking out at the right time, maybe timing the markets, but I've said it before. I'll say it again. I'm a terrible market timer. I don't care to time markets. So that's why I use options to mitigate risk across my portfolio, right? If and when the bad times come, I've, protected what I've, built here in Cash Flow Life the best I can, or at least to my satisfaction, right? And again, some people are gung-ho, they're all in, right? They're like, let's go. NVIDIA, that's it, we're good to go. Or some take a diversified approach. But I think, again, you have to kind of decide for yourself, right? What's going to be the best play. Also be careful, don't get caught up in, FOMO, right? I think FOMO is what leads to a lot of market corrections and even collapses, is that people, they're like, oh, I missed out. I got to get in. And that's usually the worst time to get in, right? Bubbles don't pop when people are searching bubble on Google, right? And it's funny because the last half of 2025, Google searches and the words AI bubble and bubble showed up a lot in searches. That's not when bubbles collapse. Bubbles collapse when people think this is the new norm or the new, status quo with markets. And that's when you want to be really careful. And I think we're very close to that. So again, my opinions only, right? I'm wrong a lot, right? But, it's okay. And if the markets never collapse and I've spent this money on premiums, I'm happy, right? Like I say, if QQQ and SPY are in the red, if YQQ is in the red, like we're seeing again today, that's a good day, right? Markets are generally either moving sideways or up, I think, as we're slightly up today. But I want to just talk about that, how I kind of decided on an all-weather high-yield strategy for Cash Flow Life. You might be in a similar situation. You might be looking for ideas. You might think I'm wrong. I'd love to hear your comments. Love to hear your thoughts on this, maybe some things that you're doing yourself. So again, just wanted to talk about, again, just being mindful of our biases. And I think always looking for better ways to learn and do things better is key to, I think, being better investors. When I started out as an investor over 20 years ago, I was horrible, right? Man, it's too much to even go into details how bad I was. I had no business investing, or at least starting when I did with the lack of knowledge that I had. But I didn't give up. I kept going. And I think that's the most important thing. I still have a lot to learn. I think all investors have a lot to learn. But stay positive, right? Keep learning all you can. And again, hit like and subscribe if you like what we're doing. Hope you got something from today's video, and have a great day.